Welcome to TalkTickers. We're the podcast that digs into earnings calls to pull out the insights that matter for experienced investors like you.
And today we're looking at Corteva Agriscience, specifically their first quarter 2025 earnings call.
Yeah, let's jump right in. So how did they kick off 2025?
Pretty strong start, actually. Q1 operating EBITDA saw a really significant jump, up 15% year over year.
15%. Okay.
And what's really interesting alongside that is the margin expansion, almost 400 basis points.
Wow. Okay. So how did they manage that? What were the main drivers behind that kind of bottom line growth?
Well, it seems like a few things came together. Strong cost execution was definitely a big piece of it.
Right.
And they also saw good growth in biological, some of their CPU products, and also seed out licensing.
Seed out licensing. Interesting.
Yeah, and importantly, both the main segments, seed and crop protection, they both delivered healthy double-digit EBIT gains.
So across the board then, really?
Pretty much. And operationally, they seem well on track for that $400 million net cost target they've talked about.
Okay. And they reaffirmed guidance too, I saw.
They did. The full year guidance from February stands, which, suggests they're feeling pretty confident about the rest of the year, kind of de-risking that second half a bit.
Makes sense. Okay, let's dig into the specifics a little more.
Yeah.
How did the core businesses perform on sales?
All right. So overall, organic sales were up 3%, if you break that down.
Yeah.
Seed organic sales climbed 2%, and that seems mostly driven by pricing, reflecting the tech value.
Okay, so pricing power there.
Seems like it. And demand looks good, too, judging by the order book. Plus, they're planning to launch something like 300 new seed hybrids and varieties this year.
300, wow.
Yeah. And the margin improvement in seed, just under 400 basis points again, mainly from, better cost management.
Okay, that's seed. What about crop protection? How did that side fare?
Also up 3% organic. But what's notable there is it was fueled by double-digit volume growth in their newer products and biologicals.
Ah, so volume driving it there.
Exactly. And this is actually the fourth quarter in a row they've seen volume gains in crop protection.
A good trend?
It is. Now, the overall market for crop protection, they think, will be kind of flattish for the year.
Right.
But Corteva itself, they're expecting high single-digit volume gains. And they believe that'll more than offset, some low single-digit pricing headwinds.
Okay, pricing headwinds. Is that something we should watch closely?
Yeah, they do expect that pressure to stick around into the second half, although the expectation is it'll be, let's say, less intense than in the first half. And looking at Brazil specifically, they expect the crop protection contribution, the EBITDA, to be basically the same level in the second half as it was in the really strong second half of 2024.
Okay, so holding steady there despite broader pressures.
That seems to be the expectation.
All right, this is where it gets interesting, I think. Beyond just the Q1 numbers, what about the strategy? The key growth drivers they're focusing on.
Right. Well, one big thing they pointed to is this expected shift in U.S. acreage. Projections are suggesting farmers might move about 5% of land from soy to corn.
Okay, more corn.
Yeah. And related to soy, their Enlist technology, they're projecting it'll be on over 65% of U.S. soybean acres this year. So really solidifying its top spot.
65%, that's dominant.
It really is. And they're also really focused on becoming the kind of go-to soybean tech provider down in Brazil. They've sold over 3 million units of Conkesta E3 beans there already in the last 3 years.
So Brazil is definitely a key focus, isn't it?
Absolutely. And it's not just soy. The corn ethanol industry there is booming, really expanding rapidly. Yeah, production's expected to nearly double by the early part of the next decade. Corn could be like a third of Brazil's total ethanol by 2026, potentially.
A third from corn, wow.
Yeah. And given Corteva's strong position in Brazil corn already, they see this ethanol boom as, a structural value creator for them long term.
Makes sense. Any potential bumps in the road they discussed? Tariffs, maybe?
They did mention tariffs. The estimate for 2025 is around $50 million impact, mostly hitting crop protection.
Okay. Is that a major concern?
They framed it as manageable, and importantly, it's not impacting their full-year guidance right now. They're working on mitigation, too, using domestic manufacturing for things like Enlist and spinosyns, and using their global sourcing network.
Got it. And it sounds like that internal efficiency focus is still very much alive, too.
Oh, absolutely. They're still targeting that $400 million in net cost improvements. That comes from productivity gains and some tailwinds on raw material costs.
Okay.
And on top of that, there's an extra benefit, maybe $65 million or so, coming from their move towards royalty neutrality. basically becoming a net out-licenser of their tech.
Right, that shift in the model. Okay, let's pivot to some of the nitty-gritty financials then. Any key figures jump out?
Well, currency was definitely a factor in Q1, a 5% headwind to the top line growth.
Ouch.
Yeah. And while seed pricing was up 3% globally, they did see prices dip in Latin America, mainly Brazil, which they kind of expected due to competition.
Right.
Seed volume overall was down just 1%. Gains in North America were offset by some timing issues elsewhere.
Right.
Crop protection, pricing was down 2%, market dynamics again. But volume was up a healthy 5% across most places. And those new products saw double-digit volume growth.
So the new stuff is really pulling its weight.
Seems that way, yeah.
And profitability for the quarter, how did it all shake out?
Operating EBITDA landed just under $1.2 billion.
Oh.
They also saw net royalty expense drop by $20 million. That's from more out-licensing income and lower trade licensing costs.
Okay.
And between seed and crop protection, they pulled out over $200 million in benefits from productivity and cost savings, including lower seed commodity costs.
Significant savings there.
Definitely. SG&A was up just a bit, mostly higher compensation and sort of normalizing bad debt. And R&D spending is on track for that 8% of sales target for the full year.
And the currency impact on EBITDA.
Right. That was about $90 million negative, mostly driven by the Turkish lira and the Canadian dollar in Q1.
Got it. So looking forward then, what's the updated outlook for the rest of 25?
Okay, so the big number, full year operating EBITDA, guidance is still $3.7 billion. No change there.
Okay, holding firm.
Exactly. But for the first half, they've actually tweaked the outlook slightly upwards, now expecting net sales to be about flat year over year, but operating EBITDA up low to mid-single digits. So stronger than they initially thought.
That's positive. And the second half?
Second half, they're forecasting strong growth. Both sales and operating EBITDA, driven by low single-digit price growth and double-digit volume growth.
Oh, okay.
They think crop protection operating income in H2 will be roughly in line with that strong second half of last year. While seed is expected to really drive the growth through price and volume, especially in Latin America.
Interesting split there.
Yeah. Cost savings will continue in H2, but probably at a slower pace than H1. And those tariff costs and mitigation efforts expected to be more weighted towards the second half.
Okay.
Also, about half of the full-year currency headwind is expected in the second half, mainly driven by the Brazilian real.
Right. Always watch the real. What are the key sort of variables or risks that could swing things for the full year?
They flagged a few key sensitivities. Final planting numbers in North America, obviously, corn area down in Latin America, the general crop protection pricing environment, and, global trade policy developments.
Standard agricultural risks, mostly.
Very much, yeah.
They also talked a bit about innovation in the seed business, right?
Yeah.
What stood out there?
Yeah, that strategic shift towards being a net out licenser is definitely gaining steam. You see it with Enlist in the U.S. and Brazil, but also in corn and canola. And that hybrid wheat program, still on track, they say, for a 2027 launch. And they're talking potentially $1 billion in peak revenue there.
$1 billion for hybrid wheat. Interesting.
Yeah, it's ambitious. For this year, 2025, North America looks strong with that potential corn acreage increase and the E3 soybean performance.
Right.
And in Latin America, they expect more summer corn planting in Brazil, thanks to good economics like that ethanol expansion, plus continued growth in the second crop, the safrinha.
Yeah.
And again, seed out licensing in Brazil is a big opportunity they see.
Okay. And zooming out to the broader crop protection market, what's the vibe there?
Yeah. The expectation is still for low single-digit price declines for the full year. But interestingly, they are seeing maybe some early signs of stabilization in generic pricing, particularly coming out of China.
That's potentially significant.
Could be. Channel inventory levels are apparently healthier than the last couple of years, too. And farmer demand, the underlying demand, seems strong.
So inventories are clearing.
Seems like it's in a better place.
Yeah.
And their own growth, Corteva's growth, is expected to come mainly from biologicals and the newer products, which crucially have higher margins.
Right. Focus on the higher value stuff.
Exactly. And Brazil's crop protection market is also showing signs of picking up again.
Okay. And just quickly to circle back on tariffs, the bottom line.
Yeah, the direct cost estimate is still that $50 million for 2025. Mitigation is underway. And importantly, that $50 million is not currently factored into their guidance range.
Okay, so potential downside risk there if mitigation doesn't fully cover it.
Potentially, yes. Or upside if they overachieve on mitigation, I suppose.
Fair point. Lastly, shareholder returns, buybacks, cash flow.
Still on track for the $1 billion share repurchase target for 2025. And the strong Q1 cash flow gives them confidence they'll hit the midpoint of their free cash flow conversion guidance, which is that 40% to 45% of EBITDA range.
Okay. So if we try and synthesize all that, what's the overall picture coming out of this call for investors?
I mean, it paints a picture of a company that started the year pretty strongly, right? Beating their own initial expectations for Q1. Their focus on cost management plus growth in those key areas like biologicals and advanced seeds seems to be working. Reaffirming the full year guidance adds a layer of confidence, even with those uncertainties like crop protection pricing and trade.
Right.
And that focus on cost reduction and the strategic shift towards being a net tech out licensor, that suggests potential for ongoing margin improvement. Plus, the heavy focus on Brazil, both corn and soy, shows a clear long-term bet on that market.
Okay, makes sense. All right, time for our This Is Not Financial Advice segment. If you were forced to cook up an outlandish but plausible trade idea based only on what we heard, what might that look like?
Okay, purely hypothetical, high-risk idea here. Remember, not advice.
Absolutely. Disclaimer firmly attached.
Given Corteva's bullishness on Brazilian corn, especially linked to that ethanol boom and their own strong position there, maybe look at going long a major Brazilian ethanol player with corn exposure, someone like Cosan, CSN3 on the B3 exchange. It's a direct play on that narrative Corteva highlighted.
Okay, long Cosan. What's the hedge or the other side?
Well, to hedge against broader Brazil risk or a commodity downturn, you could simultaneously short the iShares MSCI Brazil ETF, so EWZ.
So isolate the ethanol corn bet somewhat.
That's the idea. You're expressing that specific bullish view on Brazil ethanol, which Corteva seems keen on, while trying to mitigate some of the general country risk. Again, super speculative, lots of moving parts. Do your own homework.
Definitely. A very creative, if risky, idea stemming from the call.
So that wraps up our deep dive into Corteva's Q1 2025 earnings. We've hit the results, the strategy, the market dynamics.
Yeah, quite a bit to unpack there. What are your key takeaways? As always, remember, this is just for informational purposes. Do your own thorough research before making any investment decisions.
Thanks for tuning in for this analysis of the Corteva call.
Yeah, we'll be back soon with another deep dive into the world of earnings, right here on TalkTickers.